Let nothing disturb you. Let nothing frighten you. All things fade away. God never changes. Patience obtains all things. Whoever has God lacks nothing. God alone suffices. Saint Teresa of Avila. How central banks control your life. Central banks play one of the most important roles in the modern economy. Yet, their influence is often invisible to most people. Understanding how they work helps us see how money, prices, and economic stability are managed around the world. Central banks are national institutions that oversee a country's monetary system. The most well-known examples include the Federal Reserve in the United States, the European Central Bank, the Bank of England, and the Bank of Japan. Their main goal is to keep their economy stable, meaning steady prices, low unemployment, and a healthy level of growth. One of the main tools central banks use is setting interest rates. When they raise interest rates, borrowing money becomes more expensive. This can slow down spending and cool off inflation. When they lower rates, borrowing becomes cheaper, which encourages spending and investment. These decisions affect everything from your mortgage rate to their interest on your savings account. Central banks also control the supply of money. They can create new money electronically by purchasing government bonds or other assets, a process called quantitative easing. This adds liquidity to the financial system and is often used during recessions to support economic activity. On the other hand, they can reduce the money supply by selling assets, which can slow down inflation and spending. Inflation control is one of their core responsibilities. When prices rise too quickly, people's purchasing power falls. By adjusting interest rates and money supply, central banks try to keep inflation around a target level, often about 2% per year. This helps maintain confidence in the value of money and keeps long-term planning possible for households and businesses. Central banks also act as lenders of last resort. In times of financial crisis, when private banks or financial markets are unstable, central banks can step in to provide emergency funding. This role prevents panic, stabilizes the banking system, and helps avoid deeper economic collapses. While central banks are powerful, they operate within specific legal and political frameworks. Most are designed to be independent from direct government control, allowing them to make long-term decisions that are not influenced by short-term politics. However, their policies can still have major social and political consequences because they influence employment levels, asset prices, and even government borrowing costs. Critics argue that central banks have too much influence over the economy and that their actions can widen inequality. For example, low interest rates can make it cheaper for large companies to borrow money while reducing returns for savers. Supporters counter that central banks are essential for maintaining stability and preventing economic crises. In short, central banks do not control individual lives directly. Instead, they shape the environment in which people make financial decisions. From the price of groceries to the value of your retirement savings, their policies ripple through every part of the economy. Understanding their role gives us a clearer view of how economic power functions, not through secret control, but through the management of money itself. Knowing this helps citizens make more informed decisions, hold policymakers accountable, and better navigate the financial world we all live in. If you like our videos, feel free to like and subscribe to Template Hub Driver, or contact us at templatehubdriver.com, or just email templatehubdriver@gmail.com.